Assalamualaikum and good day. Today we're gonna present for our financial accounting and reporting 5 we are from the group 6. My name is Nur Shazimati Muhammad. No, my matrix number is 03596 with my member today. So today we're gonna discuss about the question 3. So for the sub question A is about the broad ways of earning management detect the broad ways of management detects the earning management. So what is earning management? So it's a practice of using accounting techniques to produce financial statement that portray company in overly positive light. So the technique used in accounting to manipulate financial records to improve the appearance of a company financial position using an account policy to generate higher short-term earning, which the most common ways to manipulate the financial records. So it creates also financial statement based on how accounting rules are applied. Uses by businesses. So this earnings management is used by businesses to give the appearance of consistent profits and to smooth out the fluctuation in earning. So common ways management face to detect the earning management is by expenses manipulation. Expenses manipulation, it was excluding the bad debt, which is they're doing this by delaying the recognition of an expenses. It was stated by Decal et al. 1995 P201. This approach is implemented by adding an assumed amount of expenses manipulation to working capital accruals. So for the bad debt manipulation is written by writing back of an existing bad debt provision. This approach is implemented by adding the assumed amount bad debt manipulation to both working capital accruals and trade debtors. So for the revenue manipulation, it was manipulated by creating the premature recognition of a sale, assuming all costs are fixed. It's also by Decal all 1995 P202. This approach is implemented by adding the assumed amount of revenue manipulation to working capital accruals, total sales, and trade debtors. So the common risk management faces also the firms create an inadequate provision for doubtful debt, then it will impact the future earning, whether it decreases when provision will be raised or decreased in future. So they also face the unusual movement in gross margin could because due to earning manipulation that was the management faces. Management also faces the inventories and account receivable were involved in earning manipulation by 31% to 61%. So for the companies, manipulation by earning inflating revenue, the purpose behind this is to report the significant growth. So by doing the manipulation, so they can fake or fraud fake packing the statement of financial position. So I will pass to Aina Nadira for the next question B.
I will continue with the question 3B, which is the focus of behavioral accounting perspective from the three model of human information processing, which is the Brunswick lens model, the process tracing model, and probabilistic judgment model. What is behavioral accounting perspective? The behavioral accounting research is the study of the behavior of the non-accountants as they are influenced by the accounting functions and reports. The behavioral accounting research provides various types of decision making to the accounting information and communication methods. It also provides useful information to the accounting regulators in order to create an efficient accounting regulation. Okay, the first model is Brunswick lens model. It also known as a lens model and used for the analytical framework and for the judgment study that involves the prediction process. The lens model focuses on the behavior of the accounting people that influenced by the investigation between the relationship of multiple skills and decision, judgment, or prediction. The decision, judgment, or prediction that is arise because of the response of the multiple skills. The non-accounting people mostly is being influenced because of the judgment of the prediction. For example, the prediction of bankruptcy in the business. The lens model is focused on the behavioral of the consistency of the judgment. The model will allow the accuracy of the analysis of judgment of a consistency. It also enables the ability of the tools to predict event in question. The accuracy of the lens model is important to examine the human prediction. It also important for the investor, bank loan, lenders, and also auditors. For example, the business failure. We will see how the investor, bank loan officer, and lenders decision changes that which is influenced by the consistency of the judgment. That's all. For me, I will pass the next model to the Najwa.
Sure. So I will continue on process tracing model. It is known as verbal protocol method, focusing on the good descriptor by the use of the hypothetical decision tree model. Next, each of the three circles will contain the question related to the decision process. It is the behavioral of non-accounting will be influencing the decision on each three circle. For example, the explore the international market. Next. Next is effective identifiers of people decision making is the face tracing methods are not really effective predictors of the case of interest according to the Brunswick lens model because the decision makers are always facing the problems to explain the steps that they have been going through. Next is to provide detailed knowledge. This detailed knowledge is about how functional processes perform in real-world situations by collecting mechanistic data. Next is probabilistic judgment model. It is an estimate or measurement need to be updated as more information is released. Next, there is no appropriate answer to evaluate decision in order to determine their accuracy. And the recommendation for the method of simplifying complicated judgment, there is have three. First one is representativeness. Second, availability, and last one is ensuring an adjustment. So next model, I will pass to Kanashita.
Okay, the behavioral accounting attempts to correct and enrich traditional approaches to accounting theory where the preparer and the user perceptions, attitudes, values, and behaviors are underemphasized. Behavioral aspect of accounting is that the segment of accounting which attempts to develop an understanding of both cognitive, perceived, and affective, which is emotional elements of human behavior that influence the decision-making process in all accounting contexts and settings. And there are also for the theory development, this is to improve in terms of how it is and how it should be. And also for the theory review, and that we can predict the human behavior on how it works for the preparer and how it works for the users of the theory themselves. And also there are technological integrations on this behavioral accounting research. It will help the technological integration where whether we can decide where we can implement the new system on the certain situation or not. And okay, however, sometimes the behavioral accounting research does not work well in some situations because accountants emphasize short-run measures and may not pay attention to the behavioral consequences because they have been conditioned by their education and organization experience. This is similar which focuses of the top management. Behavioral accounting research is deal with improving long-term performance. A major contribution on this point would be to include more variables such as human resource accounting, and less emphasis on short-run performance. Okay, further, in the past, the accountants just focus on the measurement of income and expense that studied the performance of company to predict the future. They ignored the fact and that past performance was the result of human behavior, and past performance itself was a factor that will affect the behavior in the future. Okay, so that behavioral accountants should make great effort to prevail on their academic colleagues to realize the importance of the behavior implications of accounting. Yeah, that's all. Thank you.